Hello everybody and welcome to a brand new video. My name is Ivan and I'm going to start a whole brand new video segment on market breakdown. So I'm going to be uploading 2 videos per week on Monday and Friday, just going specifically over the charts. Monday is going to be primarily my analysis throughout the week, while Friday is going to be more focused on the recap of positions that I already took or positions that I'm still in going over the weekend. So I think it's going to be very educational for those people who really just want to learn, and as well as it's going to be a very good way for me to actually document my positions and in the future just look back at it. As of right now, I only have one pending order placed, and that is with the New Zealand US dollar, which unfortunately did not get filled by less than 0.01 pips. That position right now is up almost 2%, that if I would actually have gotten filled, I would have already had locked in 1% throughout for the week. Unfortunately, it's just part of the game. However, I still have a whole other bunch of pairs that I'm actually looking at. Pound US dollar and Aussie yen are looking very promising, and who knows, maybe the NZDUSD will end up coming in for us at the end. But with that being said, how about we jump into the chart so we can have a better view and I can really break this down more in depth. So now we're actually on the charts, and before I get started, I do want to actually mention that I am in no way, shape, or form an expert at this. This is just my own opinion, and I do actually recommend that everyone does their own analysis and does it based off of their own strategy. This is just me sharing my thoughts for this upcoming week on 5 different pairs. With that being said, let's get started. So the first pair that I want to break down is going to be the Australian US dollar. So this is actually a pretty interesting pair just based off of the market structure. If you noticed last week, we had a pretty big rally to the upside, which resulted in price just dropping an insane amount. We actually dropped about 300 pips. So anybody who was able to short at the high, that is really in a good position. And anybody who tried to buy at the high is probably not having a good day. But it was pretty obvious that we were going to have a drop. I didn't actually expect this drop to be that massive. If you notice, we have a high, we have a low, and we have a higher high. So I did actually know last week that we were going to have a pullback, but this may actually end up being a trend change. For the past couple of weeks, if not months, we can see that the Aussie US dollar has actually been in a very strong bullish momentum, which is actually pretty interesting. But now the question actually comes, what can we do next, or how am I going to be actually looking at this position? So just based off of simple market structure, when price actually breaks a low like it did right here, we are actually expected to pull back, right? So you know the normal saying of buy low, sell high, this is actually applying right now. So right now, my job, or what I'm actually trying to look for, is I'm trying to find an opportunity to buy. And right now, the most common area, just based off of support and resistance and market structure, would be an extension of a Fibonacci level of minus 27%. So if you notice, this minus 27% adds perfectly to this support area of 76.5. And we do have a lot of structure around this area, so this can actually be a possibility. Now, things may actually end up changing due to the fact that we actually already have a potential new Fibonacci that may be actually forming with this bullish daily leg. So this would just possibly even give us more opportunities that price can actually just go a little bit lower, or it will just depend. So as of right now, our main objective is to possibly buy at 76.5. This is something that I can see possible, but as a trader and as an investor, I understand that if I think, or if we're actually planning for price to go down, then we could also look for possibilities to go short. And that is something that we will be looking at. However, we do have to actually wait for our daily candle to close before we can actually look at opportunities to go short, because this whole region right here can be a short selling area, as price can just continue the pattern formation. That pattern formation would obviously be from this high to this low, just like this, and we would have an interesting and nice pattern formation that would end up reaching that 76.5. But I do actually want to make it clear that the market is always changing, and my analysis can sometimes actually change and update depending on what the market is actually giving. Now, my main responsibility isn't to actually predict the market. I'm actually supposed to execute my positions based off of what I'm actually seeing in the market. And as of right now, the main game with Aussie USD is just to be patient. There really isn't any opportunity to buy or sell right now. We do have possible opportunities to buy at 76.5, but like I said, that can actually be invalid based off of price action. But overall, an interesting pair that I'll be looking throughout this week. It may end up actually paying off very nicely for us, or it may just be a normal pair that didn't actually give any positions or any entry. Going on to my next pair, this is one that is still affecting me right now, which is a New Zealand US dollar, which I was mentioning earlier. Now, this was just a simple market structure right here. If you notice, we have a high, we have a low, we have a higher high. So we can obviously see that we are in a general uptrend. So after we had the higher high, so after the 25th of February that we officially broke and closed this high, and we started a bearish candle, I was actually thinking that there was an opportunity to actually continue this trend to the upside. So using a Fibonacci from the low to the most recent high, I was able to create a support zone at 0.722. However, what makes the support zone very good is just all the structure that we have right here. We have a whole bunch of supply and demand in this area. Everything right here has lots of supply and demand, meaning that this area was most likely going to be a strong support. So after we actually created our support, we went into our 4-hour time frame just to see if we could find an opportunity to actually enter. And unfortunately, we did not actually get filled in. If you notice, earlier this week, we did have this candle, the first candle of the week, gave us that rejection confirmation that I love to see. So I placed my pending order on the 28th of February at around 8 p.m. So Sunday at 8 p.m. Was the time that I actually placed this. And if you notice, price continued to rally to the upside, and we had an aggressive bearish candle on London session. And the next candle from 4 a.m. to 8 a.m. was literally so close to actually filling our position. If I just zoom in right here, you can see how close that was. It was literally 0.03 pips away from actually getting filled. Actually, on the broker that I'm doing, it was actually even a little bit closer. So unfortunately, this position did not get filled. Currently, it would be around 44.8 pips of profit, so it would be a very nice position. It would already have been break even. So it does actually suck that we didn't actually manage to get filled, but you know, it is what it is. But moving forward with this position, something that I find very interesting, and the main reason that I wanted to do this was because we had a MACD divergence. If you notice, we have a low and we have a possible, still not confirmed, higher low. Meanwhile, on the MACD, we still have a low and a lower low. So that just added extra confluence to this as a position that I wanted to take. Unfortunately, it still hasn't really materialized. Who knows, is that something that's going to happen later on? I'm still actually going to keep this position open, and I'll see what's actually going to go on. I actually was thinking about placing a buy stop at the high of this, which would have ended up being a bad idea, as I would have actually lost 1%. So I'm actually happy that I did not do that. And the reason I didn't do it was just because I did not feel comfortable with the current market structure, at least at that time. I didn't think it was actually going to be viable, especially with a pound like the New Zealand dollar. Moving on to the next pair, it's actually going to be the Australian yen. And if you notice, these pairs are pretty much going through the similar phase. We have a high, we have a low, and we have a higher high. This is exactly the same as what we actually had with the New Zealand US dollar. The only difference is that we don't have that much structure like we did on the New Zealand US dollar, but we were able to create a strong support area at 81.800. And if we go here on the 4-hour time frame, you can see that this has actually previously worked as a support, and I'm pretty sure we can even find more areas and examples as it worked as a support. But right now, I really just want to actually see the current market structure of everything that's going on. If we use a Fibonacci, unfortunately, we don't really have any confluence with our zone, with our initial zone of 81.800. However, if we end up using a previous leg, just like we do right here, we would actually end up having more of a confluence. So what I'm actually expecting with the Aussie yen at this time is I want to wait and see how the daily candle closes. Now, overall, the daily candle is still pretty bullish at this time, so I wouldn't actually be surprised if it ends up closing bullish. So if it does close bullish, I may actually try to find any opportunity to short any area through here until we can actually reach this the 81.8. That is a possibility, and then later we can buy at the 81.8 and everything would be extremely good. However, that is something that can actually change just based off of how the current market structure is. What is also very interesting is that we have the possibility of an advanced breakout. We have a high, we have a higher low, and if this seems to go as the way that I think it's going to go, we're going to have a higher high. Still not confirmed, still need a little bit more confirmation, so we may end up having an advanced breakout opportunity, which would be very interesting. The next pair, and the second to last pair, is actually the British pound yen. Now, this one I'm not going to go too much into detail. We did have a high, a low, a higher high, so everything repeats itself. We have a support zone at 148.2. Now, I didn't actually end up placing this position earlier last week, as the thing with the British pound and the Japanese yen is that it was extremely volatile, and I really didn't have any type of other confluences on the 4-hour time frame. Especially the way that I like to manage my positions and everything, I like to have as many confirmations and confluence as possible. And this one did not actually have any of those confluences, which actually led me to not place this position, which turned out to be very good, as it prevented me from losing 1%. So sometimes it's very smart, and it's a very interesting technique that everybody should learn to adapt, is learning when not to take a position. But overall, it's still hovering around this. I don't really think I'll be taking this position. There is an opportunity of an advanced breakout if price manages to reach this high and drops again. Maybe we can see an advanced breakout. It is a possibility, but as of right now, nothing really additional to add. And our last and final pair is going to be the British US dollar. So the British US dollar, again, like I said, everything is repeating itself. These pair are very similar. We have a high, we have a low, and we have a higher high. What is expected to happen after we create a higher high in a bullish environment? We are expected to create a higher low, which is why we are creating our support area at 1.392. So we have everything in our advantage to expect that price is just going to rally to the upside. That's what we are expecting. Now, we do have some strong support and resistance in this area. And if we go on the 4-hour time frame, unfortunately, we didn't have that much of a clear confluence, the 4-hour time frame, which is something that I really like to see. In this case, we didn't, but if we go from this high to this low, we do have a 78.6% sweet spot, which just adds a little bit more confluence. But what I really like about this position that really puts it over the top is strictly based off of a divergence. So if you notice, this is a previous low, and this is a lower low on the MACD. However, in price, we are creating a higher low. So this does actually add a lot more confluence, and this may end up being a position that I'll end up placing later today if this candle gives me the bullish candle confirmation. I'm still not sure. We'll have to wait and see. If we do get a bullish candle confirmation, we may actually look to possibly get around a 10%, a 10 to 1 position. That would be the original take profit if we follow through with this position. But most likely I'd be looking more to take profits around this area. Again, this is only if we have confirmation, which I'm not even sure that we'll end up having. We still have almost 2 hours and 30 minutes left until this candle closes, so a lot can actually happen. in the case that price does give us a confirmation, I'm going to be looking a lot in the 1 hour time frame to see if there's going to be an opportunity to hedge, especially with positions like the pound that are extremely volatile. I really like to try to protect my investment as much as I can. So with these types of positions, I will be looking to hedge much more frequently. But with that being said, that is the overall breakdown with this. I do apologize if this went a little bit longer than expected. I'll look to actually try to make them shorter next time. And like I said, this is going to be a recurring series that I'm going to be doing on Monday and Friday, as well as I'm going to be making other types of videos that are just going to be breaking down more in depth of techniques and tricks that I'm just using just to have an edge over the market. But with that being said, I really hope you enjoyed this video. If you have any questions and or concerns, please feel free to let me know in the comment section below, and I'll see you all next time.